Hey guys, welcome back. In today's video, we are talking about AMC trading above $10, the short squeeze event, next month price targets, and many more in this video. First, we're taking a look at this. Someone didn't do their homework. That's dangerous for someone holding a short position on a stock trading below $1. Very, very dangerous. How many other shorts became overconfident and a bit too cocky? So under the assumption right now that Q1 of 2026 surpasses Q1 of 2023, if revenue exceeds 954.4 million, adjusted EBITDA meaningfully exceeds plus 7.1 million. Now, this would mean that our valuation multiples would expand to reflect stronger fundamentals and reduced execution risk, applying a conservative 10 to 15% uplift to the normalized baseline yield and implied fair current share price of 220 to 270 to match or exceed Q1 2023's relative valuation on an adjusted, fully diluted basis. So we've seen how well the box office is doing now. This is something we've been paying close attention to. And now we have to understand why that's important, because by understanding how well the box office is doing, we can take a guess at how well AMC is going to do, especially understanding that AMC is becoming more efficient and better with an even box office. So now with this, we are able to come to a price of where AMC's fair share value should be based on historical of Q1 2023 data, which is 220 to 270. Now I want to make it very clear, and I'm highlighting what I'm saying here. This is based on the Q1 2023's relative valuation. This isn't talking about anything else, but purely looking at that set of data. When we talk about sentiment, when we talk about kind of the how investors are feeling, the institutions markup, when we talk about all of these, obviously is way higher. But just talking about using one set of data, we should already be at $2.20 to $2.70. But that itself is already powerful enough. Firstly, it shows that AMC already has a huge room for growth of over 100% already, just based off of what Q1 can show us. Of course, we're not going to see this until mid-May, but this is something that we are going to see that will put AMC in a good position. Secondly, it's about understanding that all of the short positions that have been created all the way here up until $2.20, up until $2.70. Remember, we talked about here at $2.10 that there was a huge amount of short positions being created. All of these will be triggered when AMC goes up to that level. So fundamentally, we will see AMC go up. And that, when we see the price reflect, we are also going to be seeing the short sellers who previously took these massive short positions to also go into the red. And remember, they're most likely taking up short positions even now, so they're going to see even more of a loss, and that's going to then propel AMC even higher. We are seeing the best post-pandemic Q1, optimized cost, maturities pushed into the future, lots of blockbusters, and a market cap far below that 9 months into lockdown. Now, we have to understand is that one of the things we talked about has been, of course, how well AMC is doing. And remember, we also talked about how the box office is consistent. And so with this, we can see the movie industry get even bigger. More importantly, we can see AMC getting bigger. And it's how we understand ultimately AMC will go higher and higher. We have to realize the real war against the hedge funds, shorts, and market makers is simple. Accumulate quietly and hold. That's what terrifies shorts. And this is exactly what we have been doing, and it's showing effects already. Again, they thought we were going to be afraid when we saw the price go down. But what they failed to realize is that as the price gets lower and lower, they expected apes to sell, but actually, because it became cheaper, apes bought more and more. So right now, as we see the price go lower, there's actually been more synthetics being created than in the past before, because it's so much cheaper to get a share of AMC right now. $500 now gets you $501 AMC shares, a company that should organically be trading above $10. And this is what we've said. It is so much easier to buy AMC now in terms of the price than it was before. Just a couple months ago, again, we're looking at 01 of December, $500 will only get you around 250 or less shares. Now, $500 gets you 500 shares. And remember, shorts thought that as the price is going to go down, people are going to panic and people are going to sell. But actually, it's doing the complete opposite. And that's why we're seeing them faced with margin problems right now. And you have to understand as well, there's a lot of psychology behind that anatomy. In the initial uncertainty and reluctancy, gradually moving to certainty and forcefulness. It may be now, it may be later, but the upcoming movie slate, box office, and share price suppression tells it's just a matter of time. And this is what we see in terms of how the normal kind of psychology works for the share and the short squeeze event. Firstly, we've already talked about where we think AMC should be trading above. We talk about where AMC should be going. But when we talk about how this is exactly what we are looking out for, this is what we are waiting for, this is what we're seeing. We see the short squeeze top, we see the price go to the bottom, but what they fail to realize, what they fail to actually talk about as well, is how onto the next level, we're going to go even higher. And so right now we're in this area, and they are trying to, they have been trying to push us down for the last 5 years, but clearly it hasn't been working. Another example of this is that you can see AMC Entertainment sees unusually large options volume, and this was on March 31st. And this just goes to talk about how in a market opportunity like this, when we talk about market recession, when we talk about safe haven investments, AMC already pops up as one, because we knew that the theater industry is the most resistant to a recession. Now, when we deep dive into this industry and we talk about which stock has the most potential, just firstly, based on its upfront face value, and secondly, based on its future value, AMC is obviously shining as well. So it's no surprise as AMC gets cheaper and cheaper, it's not only just attracting the apes who have been continuously buying, but anyone who's looking for a golden opportunity are eyeing up AMC as well, is why we're seeing these large options volume. Now, the only thing that we need to be paying attention to, and again, I don't think this is going to happen, but if it does, you can truly understand how high AMC can go, which is what happens when this falls below 55% after months of extreme off-exchange trading levels. And you can take a look at how crazy it obviously has been. And we have to see that recently as well, especially as we get towards this state in terms of 2025 and afterwards, you can see how it's higher than ever. And so this is how we know we're getting closer and closer, because the more they need to use off exchange, the more they need to internalize these orders, the more it shows that what we have been doing is working, that they need to not have any pressure on AMC whatsoever because they're facing the liquidity stress problems. Another indication of this is borrowing an awful lot of shares all of a sudden while cost of borrow continues to trend up and volatility increasing despite being heavily manipulated. And this is the same thing as usual. Despite what we see with an 80%, 85% dark pool, they still don't stop there. They borrow continuous amounts of shares. They're seeing the cost of borrow go up. And so we know that they're using these shares to then short AMC. But like we've said in the past before, these shares that are going into the circulation are very likely to be synthetics that have been created. Another thing to look at, AMC short interest and days to cover. We've seen the short interest double since the end of 2025. And what's important about this is already knowing that the short interest we're seeing, the short interest that you normally see, are already an inaccurate set of data. We've seen a different group who obviously used the algorithms to devise what the synthetics is with FTDs, with all of these other threshold lists as well, and some other sets of data, not to the full extent, but with that limited data they had, they were already showing 300% short interest on AMC. And bear in mind, this is with limited data. They haven't tracked every single one out there, but already there we are seeing 300%. So firstly, what we have to realize is that the short interest data that we normally see is clearly inaccurate. But secondly, is the fact that if we are seeing the inaccurate short data that have already doubled, you can only imagine how much the synthetics have doubled. Because what we are looking at right now is that if the fake synthetics have already doubled, so the fake short interest have doubled, then that means the real synthetics, which were already in the billions, would have doubled as well. So another set of 4, 5, 6 billions that have been created of AMC. And that's only from the end of 2025. That's not even talking about the last 5 years. That's just talking about the end of 2025. Another case, and earlier we were talking about why AMC is the shining diamond within this industry, is because you can see here, The Wall Street also checked the comparisons over the weekend between Cinemark's barely full showings of Project Hail Mary and AMC's almost full and sold out showings and say to themselves, if this trend continues, maybe we should take our Cinemark profits and put them into AMC. So what we're seeing right now is AMC up 10% and Cinemark down 0.1%. Now, this is obviously a very shocking sight to see. Now, the reason why I say this is because when we see Cinemark and IMAX go up, AMC tends to always go down. Not because AMC is doing bad, but because it's not institutional owned. Now, what we're seeing right now is firstly two things. Fundamentally, we're seeing how AMC is doing better than Cinemark. So this sort of movement should have been expected in the first place. But secondly, you can see how when AMC goes up, it goes up by an insane amount, or at least goes up higher than the market average. And that just shows how much volume there actually is for AMC. And it shows you how much price, how much value we've been stripped off of in the normal days because we don't see this. We should see this 10% almost every single day until AMC goes into, the 3 digits, the 4 digits. But yet we don't because we're being robbed away of that. If you want to take a look at some of the price targets, next place of business is 43 to 50 area next month. That will drop to 38.42, but gap fills at 43. Now, again, the technical analysis is kind of showing sentiment. It's kind of showing where the breakout opportunity is. Like we've always said, technical analysis can't be used on AMC, at least not to an extent where potentially you'll use it for other stocks, but it still gives us a good read of the sentiment. It gives us a good understanding of what's going on. And so that's something we can still obviously pay attention to. Now, there's been talk of a reverse split on AMC. And so what we can see is that even if there's a reverse split, what we could potentially see is, again, shrinking the float and seeing a drop in liquidity. And now we talked about how drying up liquidity is something that is deadly for the short sellers. However, we have to realize that potentially they could obviously just then create even more synthetics like they have done in the past. But again, this is still something that's not yet been confirmed. This is something that's being said. I don't want to talk about what a reverse split can have on the shorts as well. Now, this is the biggest reasons for why they're trying to suppress AMC. Because when AMC goes, they all go. And this is something we have known for a very long time now. And we can see how AMC will stay within a certain price limit. We talked about trading above $10. We've just seen the price target of 43 to 50. But when we see it blow up and still not including the squeeze, it could easily go into the hundreds, 150, 250. And of course, when it squeezes, which at that point, it most likely will, because so many shorts will get margin called, it will go into the thousands or the tens of thousands. And so that's how we talk about with the explosive movements by AMC. Where institutions lose money in the market, we win on AMC and GME. Now, today there was a bit of exception where the whole market is up green and because of the things that are happening around the world. But what we've seen as well typically is that when the market is red, you'll always find AMC and GME to be up green. And there's a very simple reason for that. And that's because when the market goes red, the collateral value drops down. The shorts are then facing problems with their liquidity and capital, and therefore they don't have that ability like they normally do to suppress and short AMC and GME. And so this is why they constantly feel the need to then suppress AMC and GME, because they have so much money tied up on this play that is making them barely go positive. Another big kind of positive showcase is that Michael Burry has doubled down on his GameStop position, where he's increased the stake from 6% to 13% of his portfolio. So Michael Burry has been very, very vocal about the potential GME acquisitions and talk about groundbreaking. We'll talk about how this is going to elevate GME to a whole new level. He's been very fond of GME. He's talked very positive of GME, and you can see him showing his action behind it, where he's now made it 13% of his portfolio. So this is actually very, very good news. And this just goes on to show how well he's expecting GME. And again, when GME goes up, AMC will follow. We talked about how this is a relationship between both of us, where if AMC goes up first, GME will follow. If GME goes up first, AMC will follow. And so we are looking at something that's very, very positive. And there's a big reason for this as well. We've said this in the past. GME is making cash hand over first. They have $9 billion in reserve. But not only that, is that they have the ability to potentially borrow up to $30 billion of buying power. And so if they're making the M&A, it's going to be something that's going to be crazy. And it just goes to show Michael Burry's confidence in it as well. Now, the market is under pressure, so naturally some memes start setting up. This goes back to what we were saying earlier with when you see there's stress in the market, you will see how AMC is in the green. And that's because we're tied up with so much capital and collaterals. We talked about the news articles that was released in the past before, how the title of that article was how $1 trillion index industry is tied up to AMC. And this is why, and this is what we're looking at to talk about the power that we have. Yesterday, we briefly mentioned how SEC proves plan for deletion of CAT system. And I want to make it clear is that they want to remove certain CAT data, including CAT data older than 3 years. And the reason why this is crazy is because of the investigation into MMTLP. And the CAT system, which is supposed to bring transparency, which is supposed to firstly not only prevent things like this from happening, but aid it when they need to, they're deleting that data. And so it just looks like they're not trying to help out the retail. Also, we're looking at for HRMC, the stock is currently in the biggest bull flag and might be completing the best trading pattern in existence. And this is very important because the fundamental is doing very well. The overall market is doing very well. The reason why I say this is because we are now seeing insiders buying firstly $20,000 gold calls and $900 silver calls. Silver is currently at $70 right now, and yet we're seeing these calls being bought. So if you want to talk about people's target, this is what we're looking at. And if silver were to go to $900, HRMC would easily 10, 20x in value because of how big and how much of a reserve it has of silver. And so that's obviously what we're waiting for. As always, this is financial advice, so do take guys, and I'll catch you guys next time.